Welcome to Bro Billionaire. It's 26th of February 2023. So this is Nifty, and here we are below 200 EMA, and we'll do the Nifty's analysis with three methods: price action indicators first, then with Elliott Wave, and at the last we'll check the option chain. So as you can see on my chart, Nifty is looking bearish since last 7 sessions. It closing in red, so it clearly is in downtrend. So if anyone is assuming this will go up or break the high of 18,888, forget it. It's not going to happen anytime soon, because either it will be a sideways market or it will be a bearish market. That's what the indicators are also telling, because finally we have closing below 200 EMA. So this pink line is 200 EMA. In last week, what we discussed, let's discuss that first. In last week's analysis, we discussed these charts. Okay, there we mentioned that if Nifty breaks 17,853, expect a dip towards 17,400 to 350 levels. So Nifty has started the drop with this chart that we discussed in last week. So this was another chart that we discussed. We expected if Nifty does not break this 17,853, and if it opens gap up and moves upside, then can make this leading ending diagonal kind of pattern, and then it could drop. But this also does not materialize. So this chart is invalid now, as it has already broken this this low of 17,853. We are going to now discuss the price action indicators. So on price action indicators, you can clearly see it's Nifty is well below all short-term moving averages, as well as 100 EMA, which is long-term moving average, and 200 EMA is also broken last Thursday. You can see here, right? Sorry, last on Wednesday itself it has broken. On Thursday and on Friday it just retested that 200 EMA, but again it's down. And now you can see here it had failed to break 17,500 in last 4 candles here, right? Here you can see that closing here was not below 17,500. So here you can see it clearly now closed below that level. So most likely it will break this support of 17,400. So 17,400 is very major support, and here you can see that 17,400, right? So just check how many times it has taken support. We have talked about this support support or resistance many times last time. Here you can see it tried to break this, and finally it has to push away from this with the big gap. So once it pushed away with the big gap, the arrow turned green. Okay, and then the bullish move happened, which took us towards new high 18,888. So now we are at same level at the support side. So it needs to open gap down below this to continue the downside momentum. And similar situation is here. Aron is below. Aron lines are below 50, and currently it's showing consolidation. It has not made a new low since last 25 candles. So that's why it's showing a sideways movement. So now in next session, if it makes the new low, then the around red line can turn to the extreme negative. Okay, it can go like this. This red line will go up, and green line will stay near near 0, or you could say near below 20. Okay, so if it breaks this, then expect a bearish momentum to continue. This will continue like this. Okay, and yeah, this is major support. So break of that will take us more on the downside. Not much to say apart from that. Here you can see this low on RSI has been broken, and it is making a new low. So hope it's very clear to you here. Okay, so it has broken that low. You can clearly see here, right? You can check on your chart as well. So this low has been broken. So it is likely to go to the oversold territory now in 30s. So when it enters there, it'll not be quickly coming up. It will take time to come up, but yeah, it will be in a downtrend for sure for next couple of days. And yeah, next target, what we have to expect. So we'll talk about the next target when we discuss the Elliott wave. So for now, one can assume that, just check here what is the close here. There is a gap here, right? This gap needs to be filled. And what is the close here? Just focus on this particular close. I'll point the candles close there. So 17,311. So if Nifty opens gap down below 17,400, then 17,311 is what you can expect minimum on the downside. On support side, what is the support that we get here? 230 is one support. What is the next support? 213, 290. Okay, there are multiple supports here. So this one is the next support, which is 17,150, somewhere around 17,150. We moved around this level multiple times, but yeah, if it breaks 17,250, I can go for 17,150 on the downside. So this is how the levels are going to be as per the price action indicators. Let's move on to the next part with which is Elliott Wave. So Elliott Wave, this is our main wave or main view. Nifty made 5-wave sequence 1, 2, 3, 4, 5 here. Did not complete a 0.38 to Fibonacci. So I'm doubtful now whether it can reach there by making some different pattern altogether. Like a different pattern that we can assume could be this entire drop is wave A, which is a 3-wave structure. Okay, and this is a 3-wave pullback on the upside, which is B wave, and not a fresh impulse. And then we'll have a wave C heading towards 0.3 to Fibonacci. So this wave count also can come into play. I need to do a better look at this. I'm not going to conclude this because here you can see the price did not make a fresh high on MACD and it gave a negative divergence. So this is a possibility, though I'm doubtful on this, because the impulse move started from here was initially doubtful, but it can still be labeled as 3-3 wave leading diagonal structure. So this still looks valid. So if Nifty breaks 16,500 by big margin, then only we can consider another 200 points drop. Okay, but that is let's say that is something that I cannot say for sure. I need to take a look at these wave counts more clearly. So not to scare you, don't get scared. And this is a part of forecasting. The forecasting can go wrong as well. So let's move further. This is what we are expecting as wave 2 coming as an expanded flat correction, minimum towards 16,700 to 400 zones. This is our view. And this is the same chart explaining a little bit more in detail this here wave. This wave here is a leading diagonal 3-3 wave structure. So this can be labeled differently as well. Yeah, then we discussed this chart of leading diagonal structure, and right now Nifty has sustained well below 16,500. So this case may not be happening now. I highly doubt that will happen. Nifty's last low is 17,353, 200 points below 0.600 Fibonacci. So this case is like the possibility in this case are likely very less now. This is almost over. We might delete this if 17,400 is broken tomorrow. We don't need this chart in next week. So let's talk about that later. Okay, when it started the fall in Jan, we draw this chart, and this is how we mentioned the Nifty's move. It looked 3-3 wave structure, and then we progressed on that. We draw a charts. So this was the chart that we discussed on 5th Feb, and similar move happened after this. So this is how the move happened. Okay, WXY corrections happened, and yeah, here this chart is another chart that we discussed, that it will go like this and then go up. This is not useful now, and this case did not happen, so we can delete this chart. And yeah, this is what we discussed last time. We'll keep this chart for future references, and we'll delete it once we have a lot many charts on the screen. Okay, so this chart gave us clarity last week, and after that we have a continuous drop on the downside. So this was important. I think you missed, if you missed last video, then then you missed a lot of good details. I also was not able to create the video early in the last week also, sorry for that. Because I am thinking well enough and then only posting the charts. I'm not posting something rubbish, or you could say I'm not going to give you something rubbish on the video. I could have made this video on Friday night itself, but I was thinking on the move that happened on Thursday and Friday, and there was some confusions which have got cleared. So now I'm going to explain you how the moves are going to happen in the next week. So this is the chart that we need to consider. So this chart I have created today. We already discussed this. This as a wave 1. Okay, this is wave 1. This is wave 2. Okay, this is a complex correction. So 1 and 2 here, and then currently we are in a third wave. So third wave should reach minimum 100% or 16,600. Then these are the next levels that where a third wave can reach. So let's see if we see continuous gaps in next couple of weeks. Then we might reach here. Then we can conclude that the fall will be towards 14,300. Otherwise, this can be a fall limited to 16,600. Then we would bounce a little and drop few more points, completing the correction near 16,400 on odd levels, and then could go for new high. So this view gets invalidated once it breaks 17,700. Okay, actually the invalidation level should be this. Okay, because wave 2 can go like this and come as well. Okay, and then drop, or wave 2 can come move like this and then drop. Okay, so proper invalidation level will be this, but I would consider this because there is a gap left here, and if this gap gets filled, then we have to consider a different wave count here, but not definitely not. I'm not going to consider a bullish wave count until it breaks 18,888. So 16,600 is the first level that I need to watch. If 17,353 is broken, then this is the wave count that I come up with. So this move, as I said, was confusing. Here is the move that happened in last two sessions, that is on Thursday and Friday. So this was confusing, and I am now concluding this as a triangle. So you can go and watch it on a lower time frame. So let me switch to 15-minute chart. You can see here on 15-minute chart, this will be clearly a triangle. Okay, you will say that this looks to be an impulse move. It doesn't look to be impulse move. On 5-minute chart, you can go and check. It's a three-wave move, ABC like this. Then we have ABC like this. Okay, A, B, C, D, and this E completed here. Okay, so this is the E completed. So this is how we can label the triangle. And then we have 1, 2, 3, 4, and 5 moves. So this will be wave 1, or wave 5 could be finished here. If wave 5 is finished here, then we'll pull back up, then drop, because this will be third wave completion. This will be fourth and fifth wave on the one more downside. So both cases open, but I want to label this one as wave 1 of 5. Then we'll have a 2 wave and we'll have a drop. Okay, so this is how we can label. So in next session, we have to see where it opens, and then we have to decide the next move. But as of now, I'm considering this way, and on the downside, it can reach to 0.6 Fibonacci or 17,226. So this is where it can reach if it breaks 17,353 low. Okay, if it breaks this, expect 17,226 to come. Another target that we already gave you, if it again opens a gap down below 17,400. Okay, if it opens gap down below that, let's expect 17,301 at least, then 17,230. Okay, then we have 17,150 support. So 17,150 is the major support after 17,400. Okay, so once 17,400 is breached with the gap down, if in next session, if it breaks that level, then 17,150 is most likely to come. Okay, which is also near 3.61 Fibonacci of this wave. Okay, so this third wave can reach to 3.61 Fibonacci. It has already crossed 1.61 Fibonacci. So the next level is this one. Easily it will cross this. Then we have 17,250. So what I'm expecting is third to finished at least near this 17,000. Okay, 17,000 is what I'm expecting in a third wave. And fifth wave is going to extend here, internal fifth wave. So third wave could be completed here. So this is how I'm expecting. Then the fourth wave is not tradable. It might spend a week in this, trading in a small range, might make a triangle or a flat correction, and then give a dip as a fifth wave towards 17,000 on the downside. Sorry, 16,700 on the downside. So this is pretty much the wave count that I'm coming with. The wave count that we discussed on the channel, Nifty direction channel, is this, which is not looking a good count, and there are a lot of confusions here. So unless this happens and breaks 17,620, I cannot say for sure. And here also the fourth wave will be too much time consuming here. Okay, if this happens, so I don't consider this as a high probability wave count. So let's see, based on opening tomorrow, if it opens above 17,500 or 550 levels, then there is a probability of this happening like this. Then in that case, if it opens above 17,000, let's say 500 or 550, then only look for 100 points jump, and then from there selling should come. So looking at global markets, it doesn't look to be opening gap up. Either it will open flat or open gap down. Okay, if it opens flat, then look for first 15-minute candle low to be broken. So let the first 15-minute candle be formed, and then wait for its low to be broken to consider the down move. Okay, if that low is broken, then you can consider an entry. And also if it opens gap down, then there is no doubt, you just have to wait for 15 minutes. Then again, low break will give you the opportunity for the downside. 100 to 150 points are easy grab here in next session. So that's all on the Elliott wave. Let's move to the option chain. On the option chain front, let's see here what is happening. You can see here 17,600 is a major resistance with a 96 lakh call open interest. So this is the biggest number on the call side, as you can see here. Okay, so 17,600 is acting as a major resistance. And what is the major support here? 17,000. Okay, so this is the range for your expiry. So 17,000 is a major support with 54 lakh put writers. Okay, so put maximum number on the put side acts as a support, maximum number on the call side acts as a resistance. So the range for Nifty for this expiry is 500 points between 600 points between 17,000 to 17,600. Okay, this range will reduce in tomorrow's session if Nifty manages to close below 17,400. More call writing will happen at this level to eat the more premium by call sellers. Okay, so this will shift here most likely. And on the downside, we can see here second biggest support is at 17,400. Usually 600, 400, these resistances and support does not matter. What happens usually is if it's 17,500, it will take a jump on the next. Okay, so this will act as a second support. Okay, here where the support might get created. So in one session, it might do some time pass here and then again would go for lower. So this will become the resistance 17,500. Do watch this number increasing drastically in next session. If this number increases by twofold or threefold more than 17,600, then imagine that 17,300 is an easy deal, and then 17,000 is also no big deal. Here you see supports, but they are not as strong as the call writing happened here. So we are clearly having a downtrend here. Some more stuff that I want to give you more details on is PCR is below 1, which indicates the market is bearish. Okay, so here we can also see that max pain is at 17,550. So right now the max pain is not useful. It's useful on the expiry day. IVP is low, but yeah, it's near to the at the money IV, means there is a still chance for option sellers to gain here. Option buying is having some advantage. If you buy options, then also you can make money. Sellers, if they have a larger range, then they can make the money as well. So for sellers, it will be risky because the volatility is high around 14 now. So in tomorrow's session, if you open gap down, then the volatility will shoot up again. So option sellers who are selling the close strike to add the money, they might face some small loss. So that's all on the option chain. I don't think there is much to talk on the option chain besides the support, before expiry. So 17,000 and 17,600 seems to be range now. It might reduce to 17,500 to 17,000 in next session itself. Then 17,300 to 17,000 can be the range for this expiry. So that's all. Thanks for watching. Have a great day ahead. Bye-bye.